Good afternoon, dear students. A warm welcome to a new session on financial management. So, let us first discuss about the word finance. And as we all know, finance refers to money, cash, or fund available to carry out business operations. Finance is considered as the life and blood of business. A business enterprise requires funds at different stages to start a business, to operate, and also to expand. Now, let us look at the meaning of the word financial management. So, financial management talks about conservation and usage of procured funds. So, let us elaborate. The finance so procured needs to be invested in a manner that the returns from the investment exceed the cost at which procurement has taken place. Now, let us look at the role of financial management and discuss the first point, which is called as size and composition of fixed assets. Let me elaborate. The size and composition of fixed assets depend directly on investment decision. That is, how much capital a company is planning to invest. Let's move on to the second point, that is amount and composition of current assets. Now let me elaborate. The quantum of current assets and its breakup into cash, inventory, or receivables. The amount of current assets and its division in cash, bills receivable, inventory, etc. also depends upon financial decision. It depends upon the amount of fixed assets, the credit policy of the company, and the inventory management. Now let's move on to the third point, which talks about the amount of long-term and short-term funds. Now how do we explain? The amount to be raised for long-term as well as for the short-term depends on the financial management and organization. The firms which have policy of liquidation prefer to have more of long-term finance, although with that profit will decrease as company has to pay more interest on its long-term debts as compared to short-term debts. Let's move on to the fourth point, which talks about breakup of long-term financing into debt and equity. Now, firms can raise long-term debts by issue of equity shares as well as by issue of debentures and other borrowed fund security. Financial management helps in fixing this ratio. Let's move on to the fifth point, which says all items in profit and loss account. Now what do we mean by this? All the items of the profit and loss account are affected by decisions of financial management. Generally, items related to expenses and revenue are recorded in profit and loss account. If we pay more interest, depreciation, it will increase expense and affect profit and loss account. Now let us look into the objectives of financial management. And the first objective talks about maximization of wealth of equity shareholders. Now, how do we elaborate on this? The finance manager in a company makes decision for the benefit of the owners, that is, the shareholders of the firm. He must take such decisions which will ultimately prove gainful from the point of view of shareholders, and shareholders gain only when the price of their share increases in the market. So, financial decision which results in increase in value of shares is considered as very efficient decision. Now let's talk about the next point, which is maximization of wealth of equity shareholders. The objective of maximizing the wealth of equity shareholders automatically fulfills many other objectives. As equity shareholders get share from residual income only. Now, what do you mean by residual income? That is, they are given dividend only after the claims of suppliers, employees, lenders, creditors, and any other legitimate claimants. Therefore, if the shareholders are gaining, it automatically implies that all other claimants are also gaining. Now, let us look into major decisions of financial management. The finance function relates to three major decisions which every finance manager has to take. Namely, number one, investment decision. Number two, financial decision. Number three, dividend decision. Now, let us look into some of the examples of investment decision. Number one, opening a new branch. Number two, buying a fixed asset, plant, machine, office building, or any other asset. Let's give example of financing decisions. Deciding the source of capital, issue of shares or debentures or loans to have additional capital. The third point, change in ratio of debt and equity capital. Let's give some example of dividend decisions. Appropriate allocation of project, Second, distribution of residual, that is leftover profit. Now let us look into this slide which talks about importance or scope of capital budgeting decisions. Capital budgeting decisions can turn the fortune of a company. The capital budgeting decisions are considered very important because of the reasons like number one, long-term growth. Now let me elaborate. The capital budgeting decision affect the long-term growth of the company, as funds invested in long-term assets bring return in future, and future prospects and growth of the company depends on these decisions only. Now let us look at the second importance, which talks about large amount of funds involved. Now how do we explain? Investment in long-term projects or buying of fixed assets involves huge amount of funds, and if wrong proposal is selected, it may result in wastage of huge amount of funds. And that is why capital budgeting decisions are taken after considering various factors and planning. Now let's move to the third point, which is risk involved. Now how do we explain? The fixed capital decisions involve huge funds and also big risk, because the return comes in long run and the company has to bear the risk for a long period of time till the return start coming. Now let's look at the fourth point, which is irreversible decisions. Now what do you mean by this? Capital budgeting decisions cannot be reversed or changed overnight, because these decisions involve huge funds and heavy cost, and going back or reversing the decision may result in heavy loss and wastage of funds. So, these decisions must be taken after careful planning and evaluation of all the effects of that decision, because adverse consequences may be very heavy. Thank you, dear students, for being patient. I hope this video will help you to do well in the coming board examination. Thank you.